So now we're ready for transaction J, which is a little bit more challenging. So on May 27th, the company received $1,600 as partial payment of the May 19th transaction. So it's helpful to go back and look to see what we did in the May 19th transaction. So here's the journal entry for the May 19th transaction. And notice the description of the transaction says, billed customers for delivery services rendered. So we performed some services and we billed the customers. Remember, it says we billed them. They did not pay yet because this doesn't say that they paid. So we increased accounts receivable with a debit. If you look at the accounting grid, remember debiting accounts receivable, which is an asset, increases that account. So we increase accounts receivable to show that the customers owed us $5,500. And then we also recorded the delivery fees earned, which is a revenue. So we've already recorded the revenue and we increased accounts receivable. So now in this May 27th transaction J, we received $1,600 of that $5,500 that they owed us as partial payment of that transaction H. So what two accounts are affected? Well, first of all, cash is affected because we received cash. And which category does cash belong to? It's an asset. And is our cash going up or down when we get paid by customers? It's increasing. Then we need to look at the accounting grid. And if cash, which is an asset, is increasing, that means that's a debit. Now let's look at transaction H again, which was that May 19th transaction. Remember, we had increased accounts receivable because at that point the customers owed us $5,500. And remember, debiting accounts receivable is increasing that asset. Now, when they pay us in this May 27th transaction, transaction J, do they still owe us $5,500? No, they owe us less. So we have to lower accounts receivable. And which category does accounts receivable belong to? It's an asset. And is it increasing or decreasing? Well, they owed us $5,500. They're now paying us $1,600 of it, so we have to lower or decrease accounts receivable. And how do we decrease an asset like accounts receivable? We credit it. So let's get out our journal page, skip a line between transactions, and we're going to journalize it. First thing we need is a date, May 27th. And do you remember what the debit account was? We received cash, so cash is going up with a debit by $1,600. And then accounts receivable is the other account. It's going down by that amount because our customers owe us $1,600 less now. And then in the explanation, the publisher says, receive $1,600 as partial payment of May 19th transaction. A way more realistic, real-world explanation of this transaction is you would include the name of the customer who paid us because we need to keep track of the customer AR separately. But we'll do that in an advanced chapter. So now we recorded the journal entry, so we need to get out our ledger in the form of T accounts. And here is our transaction. So we always post the debit first. So cash is increasing, cha-ching. And then accounts receivable is decreasing because our customers owe us less. And then the last thing we check, do we have a debit and a credit and do they equal? Yep, we have a $1,600 debit and a $1,600 credit.